So something I hear all the time is I'm not a billionaire, so I don't have an estate tax issue. And while that may be true on the federal level, you could have a Washington state estate tax issue and not even realize it. And assuming that you don't could be really expensive for your heirs. Hi everyone, I'm Annie.
And I'm Hannah.
And we are estate planning attorneys here in Washington State. Today we get to talk about the estate tax. Woo! Everyone's favorite topic. A few things you need to know about the estate tax. One, if you live in Washington, you have a separate estate tax that just applies to Washington residents. Two, anyone who lives in the United States has to deal with the federal estate tax, and they are different taxes. So we want to talk about each of them in turn today, make sure that you understand them. To note, if you're not a Washington resident, you may also have an estate tax in your state, but that is not something that we're discussing today. And I want to say this up front. Most people don't owe federal estate tax. So the one that most people have to worry about in Washington is the Washington state estate tax. And most people don't even know that it exists.
It just does not get the same PR as the federal tax.
It doesn't, but it's actually a much worse tax. So you need to know about it. So let's break it down in plain English.
So first question we get always is, what is an estate tax? And the way that I describe it is that an estate tax is a tax that is paid by your estate, and it's based on the calculation of your whole estate after you've died. The government, Washington, or the federal government will pick a number, and everything above that number is taxed at whatever rate they decide that it's going to be taxed at. And in looking at what is your estate, we're talking about everything. We're talking about real estate. We're talking about retirement accounts, investment accounts, life insurance benefits, personal property. Basically everything you can think of that you own is included in part of the calculation of your taxable estate.
Yeah, so let's say that again. If you have a life insurance policy for $2 million because you're worried about your kids having enough money after you die, that whole $2 million is included in the calculation of your taxable estate, right?
Yes, and say you have a house too. I mean, you're getting really close to what the exemption amount would be in Washington.
Yeah, if anyone in Washington owns property here, I mean, it costs so much to buy a house anymore that that's all included too. It's crazy.
Yeah.
No one understands that retirement accounts are also included. Oh, not my retirement accounts. Those too.
Yep.
So basically everything.
Fair to say. And personal property. I mean, if you have a huge collection of baseball cards or something, technically that would be included as well. Cars, all that kind of thing. So, I know. And like I said, you know, there are different tax rates for above that number. So if I have an estate that's above the Washington state threshold, I'm taxed the overage. And same with the federal estate tax.
Right, so there's an exemption amount and only the amount over it is taxed.
Correct. There are two separate estate tax systems that may apply to a Washington resident. First is the Washington state estate tax, and that kicks in above $3 million. And then the other one, which applies to everyone in the country, is the federal estate tax system. And that kicks in at $15 million per person. And that's a big distinction. So we'll go ahead and dive into that a little bit more.
So let's focus on the federal estate tax exemption first. That, as Hannah said, is $15 million per person. That's a lot of money, right? But as we know, it includes everything that you have in your estate. If you're married, you have a $30 million exemption, even more to pass tax-free. So if you have over that $15 million if you're single, or $30 million if you're married when you die, if the federal estate tax applies to your estate, the tax rates are steep and go up to 40% of everything in excess of the exemption. So if you have a federal estate tax issue, you want to talk to a lawyer about how to reduce that estate tax after you die for the benefit of your family. An important note about the federal estate tax is that it's not permanent. The exemption is subject to change with different presidents or different legislatures. So right now it's really high, which is the reflection of the current administration. But when a new president is elected, that person might have a different agenda and change the exemption amounts so that they can collect more money from federal estate tax. So it does change, and you should keep an eye on those numbers to make sure that your estate does or doesn't have to deal with the federal estate tax. Because again, it is a very high tax rate, and you need to be aware of that when you're planning.
And the constant fluctuations just make planning that much more exciting.
It's exciting. Isn't this exciting? So federal estate tax is so exciting. So generally speaking, not a lot of people have to deal with the federal estate tax, but those of you with successful businesses that have high values, lots of real estate holdings with lots of equity, you should be talking to a lawyer or looking at your full picture to make sure that the federal estate tax is not an issue for you.
Right.
So you know a little bit about the federal estate tax, but the bigger issue for Washington residents is the Washington estate tax.
That's right. Now let's talk about the Washington state estate tax. So the way Washington works is that there's a lot lower of an exemption amount here in Washington. There's one $3 million exemption for one person or for a married couple. I'm gonna say that again. So you'll notice that the federal estate tax, the exemption is doubled for a married couple. In Washington, that is not the case. So whether you're married or whether you're single, you have one $3 million exemption, and everything over $3 million is taxed at a variable rate. So it depends on how big your estate is. The higher the estate value, the higher the tax rate. And I just want to remind you again, it includes everything: life insurance proceeds, retirement accounts, real estate value, business value, personal property. Everything you own is considered your estate for the calculation of the estate tax.
So back up. You don't get $6 million because you're married?
Not automatically.
Huge deal. So this means Washington is one of the most expensive places to die.
That's correct.
Right. Because other states don't have a tax like that.
I think we're actually one of very few states that has their own estate tax. A lot of states do not have an estate tax.
The pleasure of living here.
And we are certainly one with the lowest exemption amount and the highest rate. So depending on what your estate looks like, Washington very well may be the most expensive place to die.
And that's why we see people leaving Washington, because of the estate tax.
So the way the progressive tax structure works is that the larger your estate, the higher the tax rate. So let's say you have a $5 million estate. Remember, we have $3 million of that exempted. We have a $2 million taxable value. And when you've died, then your estate would be owing $238,600. And that money comes out of the estate before the money is distributed to your beneficiaries. So it's not something your beneficiaries have to deal with like in their personal taxes, but it is something that the executor or the trustee has to handle before distributions are made.
So indirectly, your beneficiaries are paying the tax.
Correct.
Okay, so where does the $238,000 go?
It goes to the Washington State Department of Revenue.
So the $238,600 goes to the state of Washington and not to your beneficiaries.
That's exactly right.
Well, and to compare that to the federal tax, if you didn't live in Washington and only the federal tax applied, you would pay no tax because it's under the $15 million.
Correct. Right. So a lot of people in Washington specifically will not owe federal estate tax, but may owe Washington state estate tax.
And a lot.
And that's why a plan that may look fine from a federal estate tax perspective may create a lot of Washington state estate tax liability.
And I think that people know about the federal estate tax and the very large exemption
and the doubling.
Maybe they know about the doubling, but they have no idea that there's a separate Washington state estate tax. But they need to know.
Very exciting for new people in Washington state.
Right. Okay, Hannah, I hear this all the time. I don't have millions, so I don't have to worry about the estate tax.
And that may be true for the federal estate tax, but you might have a Washington estate tax issue. Also, for a lot of people, they don't realize how much they have until they actually put it on a spreadsheet and calculate it. So you could be closer to the Washington state exemption amount than you think you are. How about this one? I hear all the time, well, I'm just giving everything to my spouse, so I'm not gonna have an estate tax issue.
That actually is true. If you give everything to your spouse, there's no tax when you die, but then a bigger issue comes up, is that your spouse will inherit everything tax-free, and then when your spouse dies, there's an even bigger estate there, so the tax would be even higher. So you do need to address it before either of you dies so that you can reduce the tax after both of you have died. Okay, this is another one I get. I have a will or trust, so I don't have to worry about the estate tax.
Well, that's just not true. Right. The documents themselves do not reduce estate tax. You can implement some planning to reduce estate tax, but just by virtue of having a will or a trust, you're not going to reduce estate tax on any level. So why does this matter? Why do we even care about this if we have to pay it anyways?
It's a great question, but if you have to pay estate tax and it's unexpected, it's actually a really big deal and can force some issues that you don't want to deal with, like, significant tax being paid, right? Just a lot of cash going out of the state to the government.
And not your beneficiaries.
And not your beneficiaries. I think that's unintended. Another big one that I've seen is people have to sell real estate or other assets to pay the tax, and that just sucks because if there is property that's really important to the family, we have to sell it to pay the tax. That sucks, right? And it also ruins what could have been a very thoughtful plan when someone had specific gifts going to different places or charities or people, and they really had a meticulous plan done and then didn't incorporate the fact that a bunch of money would have to be paid in taxes. So what they wanted to happen effectively doesn't happen because of the tax. And like I mentioned, I think the biggest issue is that it just reduces what your beneficiaries are going to get. And if you don't know that, it is a bummer.
The good news is that there's some planning that you can do beforehand, either in your documents themselves or during life to reduce estate taxes. And that looks like various kinds of trusts, lifetime gifting, that sort of thing. All of these conversations, though, should be done with a lawyer and should be done with a tax advisor because each move that you make, whether it's during life or after death, is going to have a tax consequence. And we just want to make sure that it's planned for that.
Here are the 3 takeaways. The federal estate tax does not affect that many people, but when it does, it's a big deal.
The second is that Washington state has a lot lower of a threshold, and so it probably affects a lot more people.
And the third is that state-specific planning is really important to make sure that your estate will pay the least amount in estate taxes.
So it's important to keep in mind that Orbit Wills does not include estate tax planning. If you think you have an estate tax issue, you may want to talk to an estate planning lawyer to just make some decisions or see if you can mitigate the estate tax in any way. But if you don't care about the estate tax, or if you're confident that you do not have an estate tax issue, or you want to get some documents done before you make some big decisions regarding the estate tax, Orbit Wills is a wonderful place to get some good, basic estate planning documents created.
For more information, go to orbitwills.com, where we can help you understand if it's the right tool for you. Orbit Wills is intended for simple estates. If yours is not a simple estate, we'll let you know.
Thank you so much for watching. If you have any questions, drop them in the comments and go ahead and give us a like and subscribe. Thank you.